What's up, mortgage coach community? I am sitting down with Jeff Vilk, just outside of Philly. How far outside of Philly are you, Jeff?
Literally like 2 miles.
Oh, 2 miles. So you're in Philly. I mean,
Yeah.
you know, like I've been to Philly, and if I've driven 2 miles, I didn't know I left Philly. So,
Yep.
So in Philly, we're going to have a really important conversation, something I want to do more of as leader of the mortgage coach community. And you know, as I see it, we have a financial literacy crisis in America. We have an affordability crisis in America, and that became very clear when I did the 2022 halftime report with Krista Messerly. We actually kind of laid out just how bad it is and just what a problem it is. And so I just think it's never been more important that we as mortgage professionals, because I'm always talking about, hey, we can be the captain of the wealth team. We can really help solve the financial literacy crisis, but we need to do more than loans. Like, we need to help educate families around their options. We need to make it clear what they qualify for, what they don't qualify for. And when it comes to CRA loans, when it comes to underserved communities, when it comes to programs that a lot of loan officers don't know about, we just need to do better about knowing about them and about educating. And we've got a loan officer that specializes in that. So Jeff, I know when I met with Brian Morley recently, and we were just talking about mortgage coach, he raved about you and how you are just such a great leader at Fulton Bank for how you're helping families in your community. So why don't you introduce yourself, tell a little bit about your market, a little bit about your practice, and we'll see what we can learn from you.
Sure. So I've been with Fulton Bank for over 5 years. I've been specializing in first-time home buyers really for the last 10 plus years, and that's dealing with bond loans, low down payment options, grant assistance. That's from county to county, staying well versed in that. Helping people that normally, usually if I get a second look, they've been kind of either pushed aside because once they tell them how much money they have or how much income they have, they're usually said, like, you're probably not going to qualify. I don't have a product for you. So that's really where my main focus has been for a little over 10 years now. And the Philadelphia market has no shortage of grant opportunities. So it does take work to stay on top of it, to stay well versed, to learn about each program that comes out, between bonds, between our internal programs that are constantly changing. So, I mean, it does take work, but definitely, I believe, the most rewarding, to get that, person in that house that otherwise wouldn't have qualified.
Yeah, well, our mission is right here: no borrower left behind. And if someone could qualify to buy a home, we want to make sure that we've come to them. I mean, at Sales Boomerang, we're working hard to come up with data as a solution to identify families in markets that qualify for these loans. But if someone qualifies as an industry, let's get them into homeownership. Like we can do it. So first of all, before we get into some specific tactics and strategies and exactly what you're doing, just give us a feel for your mortgage practice. How many loans do you close? What kind of volume you do? And then we'll get into tactics and strategies.
So CRA loans are usually, for the last couple of years, I've been averaging a little over 10 loans per month, which, for an average person that does A+ business, that's probably equivalent to like 25 loans a month.
Right.
Just because of the amount of moving parts that it takes to, get somebody to the closing table. But again, you're dealing with, a lower loan amount, per unit. So it's hard to be competitive with like the $50 to $100 million producer, but, I could average over 100 units a year.
So you're doing over 100 loans a year.
Yeah.
And guys, I want you to hear this a couple different directions, because I do think, like, if you're going to be the captain of the wealth team, you need to make your database your top priority. You got to make the concept that you're not closing loans, you're helping people achieve financial freedom. And then it's also serving your local community. It's knowing the bond programs. And if you have a team, it may not be your thing, but you've got someone on the team to do it. If you're a branch manager, every loan officer may not do it, but it should be a goal of every branch manager to make sure you're serving your local community and helping no bar left behind. And one last thought, just a little bit of a rant in this market, is this is a market where there's less leads, there's less loans, and problem solvers and are going to win. And so it helps people, and it also helps solve problems in today's market. Okay, cool. So one question that came out, how much more time does it take to do a CRA loan versus a typical loan? Is it double? You know, in your take, what is the amount of man or woman hours difference?
I've never had to quantify it. I know it's
Just a
probably
gut
two
feeling.
or three times the touches. So just to do a side-by-side comparison, if you have a borrower who's been at the same job and DU only tells you need a pay stub and a VOE and 1 or 2 month bank statements, you're done. And then you have a CRA loan that has child support, social security, multiple deposits, cash deposits, transfers, a borrower that might not be able to provide you PDF copies, how many times you have to go back to that borrower to get the correct or complete information. So that's really where the time consuming part comes in. The average underwrite for an A+ borrower come out with like 1 or 2 conditions, a CRA person. And I manage 3 other CRA loan officers who specialize in first time home buyers. So I see their scenarios as well. So it is labor intensive, and especially labor intensive up front to try to get the person pre-approved, to not have a delay later, so that when they get on the contract, so they're more attractive to the seller. But you can still do a 30-day close. If you're doing a bond loan, you might be looking for a 45-day close. It's just you're going to be doing three times more touches than you would on a regular deal.
Well, I appreciate you, brother. I can tell you that right now. Thank you for what you're doing. And then to hear that you're also managing 3 other loan officers, it's good. It's important work in our country and in our industry. So thank you for that. So tell us some tactics and strategies. So anyone listening to this, how can they go out and get more of these loans? And then let's talk about how you're using Mortgage Coach, to bring value to the consumer. And so let's start with where you're getting them, and any call it biz dev or lead gen ideas for everyone.
So primarily you would get them if you reach out to housing organizations, the ones that deal with the first time home buyers, the one that provide the housing counseling is always a good place to start. Usually I see on social media which realtors are working in what markets when I see like a listing they have come up that I know is in a low to moderate census tract. So like I try to focus and reach out to them as well to let them know that, we have special programs available, that I'm well versed in the grant programs. But you have to know it ahead of time. You can't just set, like they're in your business. But there's plenty of realtors that are, working those markets. You want to find out who they are. That'll also help. I mean, that's really, once people know that you're able to do that kind of product, I think it kind of catches fire from there. I don't think there's a shortage of your name being passed around when you're able to deliver something that even their preferred lender may not, because they don't want to do the CRA loan. As soon as they hear, I don't have a lot of money in the bank, I don't have 20% down or 10% down, credit's less than 700. Some people just, that's what I mean. They get kind of pushed aside, and I step in and, just bring it to the closing table.
Sweet. So let's talk. Okay, so that's what you do. Now let's talk, call it conversion, winning the business. And well, before we go there, why are you using a Mortgage Coach in our total cost analysis to do it? Like, what's your why?
So in terms of the education piece, if you ever ask a borrower who's been pre-approved and say it's like a low down payment, maybe an FHA offer, and you ask them, what were you approved with? Most don't know the answer or how they're approved or et cetera. So what I started doing was a twofold. With the Mortgage Coach, I would send it to the realtor. I do a live presentation with the realtor, and then I'll do a presentation with the borrower to make sure that we're all on the same page. Because the one facet that I pay attention to on a low down payment product, you're usually very close to the debt to income ratio to be at the max. So you really have to make sure everybody's on the same page in that regard. And how do you relay that information? And then one of the things I just started realizing that I should leave on there is the first column would be the max approval. So that if somebody asks me a scenario, well, what about this house? What about that house? And keep in mind, every house matters, because one, taxes could be up and take you right over the limit. So by keeping the first column static, then I can always compare the second column versus this is where you were to the max approval, and this is where this house, ABC Main Street, or 123 Main Street would take you. So whether you're under or over that income limit, plus the cash to close. And the why is definitely because the 3 factors that really, besides getting to the details, what's the rate, what's the payment, what's the cash to close. And to provide an itemized fee worksheet is just way too many numbers, not organized. And to navigate somebody through that, where if I'm not face-to-face with you and I start telling you, look in the top left, or go to the second page in the bottom right, instead of me just literally moving it on your screen, I mean, it was a game changer. I mean, I don't know how else to explain it. It was just a game changer.
So really my takeaway is the fact that it is a digital link, the fact that you can update it, and that the highlight feature where you can literally like click here and they see it, it's just a more powerful and automated way, a modern way to actually teach someone about something. And so cool. Well,
Let me add one other one that people just, I assume, do this. There's borrowers that'll get approved FHA, and there's a thing about when you're talking about education that a lower rate might sound like it's the better deal. So if I pre-approve somebody with our conventional loan at a higher rate but no mortgage insurance, and then somebody comes in and goes, wait, your rate's what? I can give you FHA, 3/8 or 0.5% lower. So I make sure that now I do it up front. I send them a comparison of here's our product versus the lower rate FHA option. So you can see for yourself which is the better overall product for you. Because what happens is some people will disappear because somebody will say, oh, you can go FHA and do, lower rate. And in their mind, because how else are you comparing it? So that was one of my bigger takeaways. Now I like to show what, in case somebody else is going to be in there, I like to be proactive now and say, here's the FHA option, just so you're aware. We can give it to you, but this is how much more expensive it is on a monthly basis. Plus cash to close is higher.
Yeah, so the combination of being able to quickly walk them through the loan details, better because it's a live interactive presentation, and then two, when you do have competitive options, you're able to help net that out with them. So, and guys, this is something I would tell anyone, whether you specialize in CRA loans, whether you don't do them, the Mortgage Coach Total Cost Analysis, it does make it easier and faster and more comprehensive for a consumer. It's just a question of learning how to do it that way. So let's show a TCA, total cost analysis, and walk us through what you're doing and how you're doing it. I want to make sure every loan officer in America who does do CRA loans is using a total cost analysis. And then I also want to push more loan officers who aren't doing them to say, you know what, we get smart on that. I need to solve these problems in the local community, whether you do it with a team member or you do it yourself. I want to get more people doing this.
Yep. All right. So let me share.
I'll tell you when I see your screen.
Yep.
And boom, I see, looks like the advice engine. I'm not seeing an actual presentation, but I'm seeing where you input everything.
Yeah, let me go to the, I'm sorry. Okay.
Oh, it's okay. And you'll notice, guys, you could add a video in the upper right-hand corner. He just clicked preview and highlight. And now we're in a consumer experience. This is a presentation that I assume you like email it. It's a link in an email. That's how you do it most of the time.
Most of the time I do it as a link. I actually made Fulton approved a little house. I'll show you that after. That's basically for the TCA. So it's, I'll show you that after. I thought it was cute, but I'll open up my email. So the payment, so this is that scenario that I sent to a borrower because the borrower's credit score, I had to go FHA. I wasn't getting an approved eligible for the conventional scenario. Her score went up and she wanted to know what would the difference be. So you'll see this is a little off because I was literally doing this live with her. I wanted to show her what the difference in the mortgage insurance was versus the conventional scenario and what the difference in the payment was. So that's usually how I walk through, where I'll show like the two different options, but hold on, there should be, there you go. The main screen, let's start.
Real quick question.
Yeah.
When you started, you were at that pop-up, you were in the more information. Do you start in the more information or do you always start here?
No, I don't know why it started there. Usually I'll start right from the beginning because I like to show them the FHA versus scenario, because this number right here in green is really when you're doing apples to apples, if you look at the yellow lines and you work your way down, I'm not hitting you with like, first of all, this would have had to been otherwise two separate itemized fee worksheets. I was able to do this one, the FHA scenario. I copied, to add a product, and I did this in literally like 15 or 20 seconds because I knew what the rate was. There's no MI. I copied the taxes and insurance. It was very effective and quick. And then I was able to show this number so that they can see that if you go the conventional scenario route, you're going to save $47 a month, even though the difference in the rate was 0.75%. So that way, if she goes to somebody else and somebody says, well, FHA rates is like at 5%, she at least has been armed with the knowledge of, yeah, I know that, but the program that I'm in, it still ends up being $47 cheaper for me to stay with the conventional option.
Yeah, and I want to right here, guys, the best strategy always beats the lowest rate, so strategy always beats loan program. And so it's another reason why it's important. Every time you help a consumer with a mortgage, you're using a mortgage coach, you're showing them strategies so that they can get the best loan. Whatever the best loan for them is, they can't do that without going through this total cost analysis process. All right, cool. Loving it. Just keep walking us through. And anybody watching this, if you're watching this on Facebook and you have a question, put it in comments. If you're watching this in our YouTube channel and you have questions, let us know. Keep on rolling.
Sure. So then the thing I like about the live presentation part is that I say, like, it starts with the overview. So you're not overwhelming anybody that's not financially literate. And believe me, when you hit them with a lot of numbers, it does become overwhelming to the part where you don't get a lot of questions if you send them too much information at one time. So by starting here, I give them just the overview. Here's sales price is static. Here's the rate. Here's the payment. Here's the cash to close. The cash to close is important because a lot of the programs that I do will require down payment assistance, but I don't want to add that in as another layer. So you'll see when I go in here, how we came up to the cash to close situation. Because the next question is, well, is that taken into account our internal grant? Is that taken into account the Philly grant, for example? So I go, okay, you have great questions. Do you want to know more about the cash to close part? Go to more info, closing costs. And when I go to the bottom and I go to the details, now I can show them the grants that they were receiving. So you'll see the negative numbers here. If they wanted to see where the number came from, to make sure that it's in here. But it's not, again, like there's a lot of numbers you'll see as you scroll up. So that way they don't have to pay attention to every single fee, but I can answer their question. But again, the beauty of it is I know they're looking at it because I'm literally highlighting it while they're looking at it with me. So that's the benefit there. That's one of those, the takeaway, to make sure they know everything that I'm bringing to the table and how I came to the cash to close. And same thing when I do it with a realtor. I mean, they're in love with this option. The fact that we're able to provide it in live time and the realtors can access it on their phone since they're always on the go. That was another thing that I've gotten great feedback about. So
I love this. And by the way, you can, by the way, is there anything else you want to show in this before we stop sharing the actual mortgage coach advice platform?
I was just going to show the actual TCA.
Go for it. I showed that. I have a couple questions on CRA, but show us what you want to show us.
Let me see if the last one is sent. There you go. Let me pop it out.
Remember, guys,
The little house total cost analysis presentation. So we made our own.
ooh, check that out.
Yeah.
And it looks like, so you put a link to the TCA.
Yeah, the link is in here, so they would click it, and then they would literally take you right to the presentation.
Will you mind sharing one of those emails to me? And you notice how, guys, he's packaging this like this is a valuable service, and I'll bet you just showing realtors that, hey, I've got this. And what do you call it? Show that image again one more time. I want to see what you call it.
Yeah, sure. What is
You know,
total cost analysis presentation.
Okay. One thing we've heard, I mean, I've heard people call it all kinds of things. I've heard them call it the smart loan presentation, the best loan presentation, obviously the total cost analysis presentation. I would love to know, anyone watching this, what do you call it? I interviewed Sean Herrero recently. He called it your personalized loan options website. So I would love to know what do you call the total cost analysis to the consumers you serve and to the realtors you have. So, and if you have some packaging like this, a way that you put a wrapper on it digitally, I'd love to see any samples of that.
Okay. I just felt because when this first came out, we were just using the link, and the link was just didn't have the substance. I wanted it to be like an experience. So I thought, I imaged the house, and it's just give it.
I like it.
So
nice marketing job there. So Jeff, stop sharing the screen real quick and let's just chat a little bit.
Absolutely.
So now someone asked what CRA is. I'll answer that question real quick, and then I'd like to talk a little bit more about that. It's Community Reinvestment Act. But would you mind just giving a little 101 on exactly what is CRA lending? And then, from what I understand, banks and depositories, I mean, they have some federal requirements that, hey, you need to support this. So could you just give us a little 101 education on that, on what CRA lending is and what the requirements are?
Sure. So CRA is basically they're grading banks at lending to low to moderate census tract areas, majority, minority communities, borrowers. So they just want to make sure that there's equal lending. I mean, that's how they're grading it based on the areas that you serve, and that's how, I think Trident just got in trouble because they were violating that. So that's really what you're graded on, like lending to majority, minority, lending in low to moderate census tracts to make sure there's no redlining going on. So that's what they're grading lending institutions on. I know correspondent lenders don't really follow the same requirement, but any like major bank that's lending does. They follow that requirement.
Yeah, so I mean, my takeaway is if you work for a bank, and if you're a bank, like this is an optional thing, like you need to lean into CRA lending. And so if anyone's watching this and you work for a depository, make sure you forward this to management. We want to make sure we are leaders at helping you go beyond what the legal requirements are. I mean, I always feel like everything that you have to do to be compliant just makes you a better person and it makes you deliver a better service. So really lean into this. And for the IMBs, independent mortgage bankers, I don't think you guys have the same requirements, but there's still a competitive advantage to be had. And there's still the communities and the markets that you serve that need your help. They need families. There's families, again, no bar left behind. If someone can qualify for a home, as an industry, we should find them, we should educate them, and we should get them into homes and use Mortgage Coach to net it out for them. Any other things? Just you're probably speaking to other mortgage coaches like yourself that love these types of loans and love helping families this way. Any closing thoughts or advice?
Yeah, I know if you start doing CRA loans, I mean, I don't think there's a more rewarding feeling than helping an underserved community. But I mean, just to give it specific, like put a title to it, if you're lending, you're helping a single mother with her kids move into a home that she wouldn't otherwise be able to move into without utilizing low down payment and grant assistance. You got people that are living in like terrible renting situations that, the landlords aren't taking care of the property, or they're being pushed out because, everybody knows rent's going up, borrower can't afford it. They have to go. Now they have to find other housing. I mean, it's a rewarding feeling to be able to help somebody. It's just because, again, like if they don't get the right help, then again, they might get discouraged because they go to one lender because they knew somebody, and they just keep saying, you're not going to work. It's not going to work. Then you follow somebody that knows how to do a first-time homebuyer profile and to help them get the grant assistance. I mean, I just believe there's nothing more rewarding, which is why I've been focused on it for so long.
What percentage of people aren't, that just homeownership is just not an option for them? Like what percentage of home people do you feel that if they have the right loan officer who's well-armed, well-educated, they can get into it? How many people just aren't eligible? What percent? Gut.
25% would be literally when at the time of application, either score's not there, job situation just not enough yet. Or literally when I say no money saved, I mean no money saved. So even with help, you still have to have some of your own skin in the game. So I would say like 25%. From what I've seen from my conversions.
So 25% can't. So 25%.
Yeah.
But
One out of
and I
four
assume that you're giving them a roadmap to do it. So
Correct.
so literally 75% of people in your take, they can get into this. And if they can't, you're going to give them a roadmap and a plan to do it, so they can get on it. And what is the minimum? Like if you thought of someone from your perspective, a guy who's an absolute expert at this, what are the minimum requirements for homeownership?
So for us, for my market, you need to. So PHFA, which became a Pennsylvania Housing Finance Agency, came out with an incredible grant, the KFIT. You have to have a minimum of 660 to utilize those funds. So that's for that product. Philadelphia has a Philly First grant up to $10,000. That's not credit specific, so you have to get an approved eligible in our system. So technically speaking, minimum 620. If you have no credit, we can do alternative credit. But you know how they say, you want to have your best foot forward. You want to be probably in the mid sixes to have a shot at it. So
okay, mid sixes, and how much money in the bank?
People always ask that, but it's a really difficult thing to, because like one, even if you make your offer, you still have to put an earnest money deposit. You can't tell me putting down $1. You're still gonna have to pay for an appraisal, home inspections. I mean, you're talking about over 1,000 just there. I like to
Like
tell people
$3,000 to $5,000.
3 to 5. I mean, $3,000. I've seen people be in the right scenario with a seller's assist with grant help. You can be in there for like 3,000.
Okay, so 3,000 and an income. What's minimum income standards in some of these programs?
I mean, there's no minimum, but I mean, again, depending on the sales price of the house, I average approximately 30,000 plus.
Okay.
So if they don't have any debt, they didn't take out that $700 car payment, 30,000 can get
So
them.
netting it out, mid 600 FICO score, $3,000 to $5,000 and $30,000 in income. Homeownership could be a reality, and financial freedom could be a reality. Because that's, again, here at Mortgage Coach, not only believe in no borrower left behind, we believe that all borrowers can achieve financial freedom. Now, obviously, someone who, and financial freedom is either having your mortgage paid off or having enough money to pay it off. Guys, if someone got into a home on a CRA loan and then prepaid the mortgage by $100 every month, they could be financially free probably in 20 years, have a free, clear home. Or maybe, it's 25 years, but everybody can achieve that. You align with that whole financial freedom philosophy?
Yeah, I've seen it because I'll see what I call like a generation skip. So it's like if you look at the grandparents now who bought houses when they were younger, are able to leave houses to their children or sell the house, through an estate, which otherwise there would be no chance they would have anything left behind because there was no physical savings. It's not like when people don't understand the concept of like a forced savings account, if you've been renting your entire life, at the end of it, you have nothing left. So regardless of interest rate, et cetera, if you're buying a house, you're building equity at some point, if you have to sell, whether it be under duress or not, you have something you can sell that's worth value. Your rent's no value to you. And the average person, when I ask him, are you even investing in a 401k? It's not a large number. It's not because the income's already low. They don't want to take any further money out of their pay to invest in retirement. That's the worst one I see. Because I ask people if they're a little bit short, do you have a 401k? No, I do not.
So I just had an idea because I think there's, again, one of the challenges is that as you said, these loans are 2 to 3 times more touches. So loan officers that are trying to, call it maximize their income, personal income, like they may not want to do the loan that takes 2 to 3 times the amount of touch points. But I also know, a lot of loan officers that absolutely kill it, some of the most successful loan officers in America, and they donate money. They give money. So guys, housing, there's a housing crisis in America, affordability crisis. Think about this is that you could be helping people get into home ownership, and then think about it where there's multi-generations that have rented. And if you could stop that, someone owns, and then give them a roadmap to paying off their house early, it may take a full lifetime to do that, but they can change things. So I just want to make the point, guys, we can change America as lenders if we go beyond, what we have to do and we help people. So Jeff, any other closing thoughts? Anything else you want to say to the Mortgage Coach community and your peers before we wrap this conversation?
No, I like the only thing I would add is I'm a huge fan of the Facebook posts to learn about, the strategies that everybody employs. So I think it's a great resource. So
you do follow our YouTube channel and you're active in our Facebook group?
Absolutely, because that's where I usually pick up my, I only know what I know. I need to see what other people that are successful doing it. And you give kind of like a great intro to each interview, so I know who I'm paying attention to and what they've done. So you interviewed somebody that just got in the industry, was doing like 100 units out or 50 million, to hear what people are doing to generate business. I mean, I think it's a great resource. So just like interviews like these, I think gives a great, podium for people to talk about these different platforms.
So my closing thought is, Jeff, I want to get more people that are helping families with CRA programs. I want to do more of these interviews. So and I do think you need to be doing 100 a month. Like, I'm here to interview best practices, and not 100 a month, 100 a year. If you're doing, 10-ish a year, you're among the best. That's not to say if someone's out there doing it right and you're closing less than that I won't interview you. Because if you've got some ideas and stories to share, I'm looking for it. I'm also Jeff, this is a shout out to you. I'm looking for financial freedom stories where someone went from possibly renting forever and through homeownership, through a CRA loan, they're on a path to financial freedom. Or I've done some interviews where people are very affluent and they have credit card debt and they refinanced it, they consolidated their debt, and they got a path to financial freedom. Or someone's buying a home. I mean, like I've seen some move up strategies where someone's going from, I'm moving up, I either have the same or lesser of a monthly payment, but I take some of that equity out and I either invest it or I use it to repay my mortgage and I accelerate my financial freedom. But I just think we as loan officers, we can give people advice that helps them achieve financial freedom faster. So keep an eye out for any, call it financial freedom stories, where you delivered that through a total cost analysis. And just know I want to interview you again. And I also want to look for more people like you that are doing good work in the industry.
Sure, definitely.
Take care, brother.
All right.
This call is a wrap. If you do not subscribe to our YouTube channel, make sure you subscribe. And this is a wrap.